Hello everyone, welcome back to our channel. Today, we're going to talk about a hot topic in the financial world, Amazon's stock split and buyback. So let's dive right in. In March 2022, Amazon announced its first stock split since 1999. The company's board of directors authorized a 20-for-1 stock split. This means that for every share of Amazon that an investor owned, they would now own 20 shares. However, the total value of these shares remains the same. The record date for the stock split was the close of business on May 27, 2022. This means that shareholders who owned Amazon stock at the close of business on this date would be eligible for the stock split. The shares began trading at the adjusted price on June 6, 2022. The stock split did not impact Amazon's market capitalization. This is because a stock split increases the number of shares while proportionally decreasing the price of each share. Therefore, the overall market value of the company remains the same. The board stated that the split would give employees more flexibility in managing their equity in Amazon and make the share price more accessible for people looking to invest. This is because the lower share price resulting from the split could make it easier for more people to afford to buy shares. Remember, a stock split does not fundamentally change anything about the company. It merely increases the number of shares outstanding and decreases the cost of each share. If you found this video interesting, subscribe. A stock split, like the one Amazon has implemented, can have several implications for both the company and its shareholders. Firstly, a stock split can make a company's shares more accessible to a broader range of investors. By reducing the price of individual shares, stock splits can make it more affordable for small investors to buy shares. This can potentially increase the liquidity of the shares and broaden the company's shareholder base. Secondly, a stock split can potentially increase a company's market visibility. When a company's shares become more affordable and widely held, it can attract more attention from the media and analysts. This increased visibility can potentially boost the company's reputation and brand. Thirdly, a stock split can potentially lead to a short-term increase in the company's stock price. This is because the increased demand for the more affordable shares can drive up their price. However, this effect is usually temporary, and the stock price may eventually return to its pre-split level. It's important to note that a stock split does not change the fundamental value of the company. The total market capitalization of the company remains the same because the increase in the number of shares is offset by the decrease in the price of each share. While a stock split can have several implications, it does not change the intrinsic value of the company. Therefore, investors should always base their investment decisions on the company's fundamentals rather than the stock split. In addition to the stock split, Amazon's board of directors also authorized a buyback of up to $10 billion worth of shares. This buyback replaces a $5 billion share repurchase plan that was established in 2016. A share buyback, also known as a share repurchase, is when a company buys back its own shares from the marketplace. The effect of a buyback is that it reduces the number of outstanding shares in the market. When a company buys back its own shares, it's often a sign that the company's management believes the shares are undervalued. By reducing the number of shares outstanding, a buyback can increase the earnings per share ratio, which can lead to an increase in the company's stock price. However, it's important to note that a buyback does not guarantee that the stock price will increase. Other factors, such as the company's earnings, the overall health of the economy, and investor sentiment, can also affect the stock price. While a buyback can potentially increase the value of the remaining shares, it's important for investors to consider other factors and do their own research before making investment decisions. The recent stock split and buyback by Amazon have several implications for investors. Firstly, the stock split has made Amazon shares more accessible to a broader range of investors. The lower share price resulting from the split could make it easier for more people to afford to buy shares. This could potentially increase the liquidity of the shares and broaden Amazon's shareholder base. Secondly, the stock split could potentially increase Amazon's market visibility. When a company's shares become more affordable and widely held, it can attract more attention from the media and analysts. This increased visibility can potentially boost Amazon's reputation and brand. Thirdly, the stock split could potentially lead to a short-term increase in Amazon's stock price. This is because the increased demand for the more affordable shares can drive up their price. However, this effect is usually temporary, and the stock price may eventually return to its pre-split level. In addition to the stock split, Amazon's buyback could potentially increase the value of the remaining shares. A buyback reduces the number of outstanding shares, which can increase the earnings per share ratio. This can lead to an increase in the company's stock price. However, it's important to note that a buyback does not guarantee that the stock price will increase. Other factors, such as the company's earnings, the overall health of the economy, and investor sentiment, can also affect the stock price. In conclusion, while the stock split and buyback by Amazon could potentially have several benefits for investors, it's important for investors to consider other factors and do their own research before making investment decisions. That's all for today's video on Amazon stock split and buyback. We hope you found this information helpful. Remember, investing always comes with risks, so make sure to do thorough research and consider seeking advice from financial advisors. Thank you for joining us in this discussion about Amazon stock split and buyback. If you found this video helpful, please give it a thumbs up and share it with your friends. Don't forget to subscribe to our channel for more financial news and investment tips. We post new videos every week. And as always, we'd love to hear your thoughts. What do you think about Amazon stock split and buyback? Do you think it's a good time to invest in Amazon? Let us know in the comments below. Thank you for watching, and we'll see you in the next video. Goodbye.